Hey guys, what's going on? It's Danny Deals. Welcome to Un Poco Moss, guys. Today I really am giving you Un Poco Moss on a Monday, coming at you with my third unrequested broadcast. Toper time check. It is July 17, 2023. It's a Monday. It is approaching 8 p.m. out here in beautiful Los Angeles. I have been at the office for quite a while now, hoping to go home and see my sweetie very, very soon. But guys, as 8 o'clock approaches, as darkness descends upon us, I just want to give you bring my shiny forehead to bear and just really with that gleam of light, that gleam of hope off of my extremely shiny forehead. I want to break down what's happening with the SoFi stock, what I expect to happen the rest of the week, and why, just my personal opinion, this is not financial advice by SoFi, not advice by SoFi, but just my personal opinion, it really is not the time to dump the stock. The stock has not run out of steam in any way, shape, or form. Guys, I'm going to basically explain you may or may not be very familiar with stock charts, guys. I'm not any expert on technical analysis. Um, try to look at just the chart in terms of patterns. What's happened before, what's likely to happen again. Um, and basically, guys, this chart is screaming at me. Um, I'm just gonna like roughly take a look at this, and you guys can tell me if you think I'm insane or whatever. I mean, that's totally fine. I'm not mad at you, but basically, guys, if you look at this period of time after the three pumps into the 20s, you see the stock sort of do this kind of breakdown here where it stops falling, it tries to go back up, it falls down below this $10 level, it goes back up, falls below, and it does that like four times. It touches the line four, five, six times before market makers decide to take it lower and ultimately take it down below $5 here in I guess that would be May of 22. Now, guys, look at this period between this breakdown and this current period we're in. So this period, guys, is going to be similar to this period. Let me do that in a color that's a little bit more better. Let me get rid of that. Look at this. This stock comes down, guys. It falls down. It tries to test 10. It finally goes down, breaks down through 10. Just look at this period here, guys. This is where I think the stock is kind of breaking down, consolidating, showing a lot of gravity around that $10 mark. Now, if you look just below that $10 mark, sort of right in here. Now, if you look at this right in here, guys, very, very similar. Um, Look at this period, guys. From here to here, it's like 13 months. So, where does 5.5 months, guys? Where does the pendulum balance? Where do you put that wedge if you want these two sides from right here to balance? Guys, you put it at like 6.5 months. So, if you're over here in April when this crashes, you're over here right here, and then you're back here in May. Right here in the middle, guys, is going to be November, which is going to be that midpoint, guys. Right here and right here. This is where this pattern is going to balance out. And my basic contention is that market makers did one thing on the way down, consolidated the stock between that 8 and sort of 4.50 $5 level, and then the stock is basically going to come out in a very similar pattern that it went in, and we can expect the stock to move up significantly from these levels. Just telling you what I mean. I know, guys, it's pretty easy to just scribble on a chart. Any idiot can do it. But if you actually, sort of do a willing suspension of disbelief here, just humor me, guys. Just humor me. Okay, so the stock comes down and it tests. You see this right here, guys. After it breaks down through 10, it makes sort of this skewed W pattern. It's not a perfect test, but if you look over here, guys, this is an absolutely perfect um, double bottom pattern that we see forming here. This is an extremely bullish pattern. We went through 10, we came back down, tested 8 in textbook fashion twice, and then, guys, both times just absolutely bounced off of 8. Look at this candle here, extremely bullish, 62 million. This is only 38 million shares, but I view that as even more bullish. There's no appetite for selling down there below 8. Basically, if you look at what's happened with the stock, I'll 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 go back just to sort of my original thought is that we're coming out of this pattern the same way we came into it. And it doesn't really take like any kind of genius or that much imagination to sort of see what we're talking about here. Like after this little period of consolidation or, up and down or barcoding or triple test or whatever you want to call it, guys, you have this line here, you have this line here. And then you see the stock come back up here, here. My contention is what's going to happen is basically see how there's two tops here, one and two. Well, you have this. This is the midpoint right here. This is the midpoint of this sort of market maker game. You can, people call it different things. People talk about like Fibonacci patterns and other patterns. Where a stock is going to go through these certain progressions of buying and selling and consolidation. But guys, I mean, I'm just looking at it. I'm just looking at the chart with my eyes. You see this corresponding to this, okay? I mean, that's as plain as day. But the thing is, you're saying is where is this, retest of the $8 level at the outside? And guys, my contention is we were basically working our way up to that level. Like this area is this area, and that's what was going to happen. But market makers dialed up this little, what I would like to call the chia pet candle. This is where you get these huge synchronized downgrades, just slash and burn downgrades that are sort of a shock to retail investors who aren't paying that close attention. They think the name Wedbush is responsible. They end up dumping. You end up stopping a lot of people out. So the stock was marching up through 650. I think it would have, in fact, made much this same pattern that you see over here, but Chiaverini and Wedbush and the shorts and the market makers basically put their heads together, in my opinion, or that's just how it worked out coincidentally. I mean, I don't want to cast aspersions at anybody, but I think that's why there was this artificial downward pressure here. Notice how quickly, though, the stock recovers. And look at this point, guys, and look at this point right here. I mean, you see it, and then it goes down, and then this line is, it's like, I mean, guys, it's like looking in a mirror. If you fold this thing over, it basically folds over onto itself, with the exception of this one point. And guys, this stock has made the round trip. It got very popular. It was very promising. This is what market makers do, guys. They wring out stocks when they're popular with retail investors. They wring out every penny. They short the hell out of it on the way down. They play all kinds of games with it around earnings because they know that's when a bunch of money and a bunch of eyeballs are going to be on the stock, and they can easily manipulate things with a downgrade or some such nonsense. But guys, when I look at this chart, I know it just looks like a bunch of scribbling, but this is very, very clear, guys. You see, I think on this chart, like, if you can't see that this is a bullish setup, guys, given the history of this stock, given that it's run to 25 three times, given that it's continued to grow the top line very, very rapidly, and that it's marching toward profitability. Anybody who knows anything, guys, knows that a lot of institutional investors just aren't going to come into a stock that is losing money on a gap basis at the bottom line. So when SoFi starts to make money, either I believe in Q3 or Q4, even in a doomsday scenario, I think they'll start to make money probably in Q1 of next year, but I believe it'll be in the second half of this year. Um, but that's when institutions are really going to come in. And guys, look at the narrative that they create with SoFi. This happens all the time. Of course, Truist Andrew Jeffrey came in and reiterated his $11 buy rating. You don't see that you just see the Morgan Stanley downgrade. You see an article about Bitcoin miners. You see an article about Biden administration loan payments. You see an article about Upstart, but you don't, really see anything about the fact that SoFi has basically defied the shorts, defied the market makers, and has continued to rip. And then even looking over at like a site like TipRanks, you see Morgan Stanley says time to sell. SoFi slips. SoFi could drop over 60%. SoFi downgraded underweight. A story about Facebook, and then you see finally one story: SoFi stock rally continues. Top analyst sees more. But basically, guys, the negative to positive articles are running at least 3 or 4 to 1. So that's the negative. But then if you actually look over at the analysis, you'll see that quite a bit of their oscillators, their authors, their people. The summary is strong buy, the oscillators are neutral, the moving averages are a very strong buy. And we know that, of course, the options are absolutely through the roof, guys. On the calls at 9, there's 13,000, 950, 28,000, and $10 calls, there's 38,000. Guys, retail should cash those in and take their profits tomorrow. I would certainly do that if you own those options. I think there's a very good chance, that if you own those options, market makers are going to take profit on those options and they're going to dump them on retail investors, sell them to retail investors later in the week on FOMO, and then they could kill a lot of those options on Friday should they so choose. I think that will be more difficult and more expensive because we are coming into earnings, and I think everyone knows, from the analysts to the shorts to the bears, that Noto is very clever and he could pull a rabbit out of his hat on any ER he wants to just by sort of cooking the books. And when you're the CEO, the CFO, you can make certain accounting decisions, certain decisions about how to deal with certain numbers, and you could make one quarter look better than another quarter if you really want to. Accountants are good at that sort of thing, especially really good ones for really big public companies. Some of these companies cooked books and faked the whole thing for decades or years, and they weren't caught. But I think SoFi, the point is, they're very much in control of their numbers. They're very much in control of their beats. They set up manageable beats, manageable growth, manageable expectations. But I think Noto will absolutely rip a home run one of these times instead of just hitting singles and doubles, and it will catch sharks and bears unawares, and they're going to be in a big, big trouble. Wubba, wubba, wubba. So that's the options, guys. But then when you look at the forecast, Andrew Jeffrey, buy at 11, a 5-star analyst. And again, Morgan Stanley, a 2-star analyst, was the sell there at 7. But that's still on all the front pages. Andrew Jeffrey does reiterate a lot, frankly. Probably not as much as the Chia Pet from Wedbush, but he does reiterate his buy rating when he smells FUD in the water. Guys, another thing that is ultimate source of FUD right now is that insiders are dumping. I read multiple articles about that on Investor Place. If you look at the actual insider confidence signal, it's positive. There's buys. 10 buys, 0 sells in September. 1 buy, no sells. 2 buys, no sells. 11 buys, no sells. Guys, SoFi insiders were buying the hell out of the dip. And yes, there was a couple sells from insiders recently, a couple of months ago, but it was only a small percentage of their portfolio. And if you look at the inside holders, the last filing was a director buying 31,000 shares. She has all 840,000 shares. And then the June 30th filing, BlackRock adding 200,000 shares. They have 36 million. State Street added 700,000. Geode added 500,000. Schwab added 37,000. The only company that sold was Parkside Investments. They sold about half their shares, or about 1.16 million shares. JP Morgan added, Credit Suisse added. Those weren't a lot of shares. ARC, of course, added the 281,000. But we have to get way down here to see those small insider sells, and then there's just more and more and more insider buying. Overwhelmingly, insiders are buying the shares. Retail owns a lot of shares. Insiders own a hell of a lot of shares, and I think that in some way mitigates the fact that institutions don't own a huge percentage of this company as yet. But believe me, I think that will change with net profit in Q3, perhaps Q4. Time will tell. Guys, just wanted to give you a little bit of an update on where I think the SoFi stock's going. It was up a total of 52 cents or almost 6% on the day, 40 cents during trading, and 12 cents there after hours. So, very bullish day for the SoFi stock. Shorts were returning shares, which was putting significant upward pressure on the stock. Guys, I look for continuation tomorrow. Futures are down slightly, but very slightly. A lot depends on these bank earnings. I think if we see some good earnings from Bank of America, some of these other big banks, the rally continues. SoFi moves up through $10. Guys, tell me what you think is going to happen down in the comments. Tell me why you think Upstart's so much. Is it just purely a short squeeze, or are people bullish again on Fintech? Guys, it's July 17, 2023. Time is 8:10 p.m. out here in beautiful Los Angeles. I got to get home, get some dinner in me, get some rest, and get up and do it all again, folks, because tomorrow we're doing battle again. Forces of good versus forces of evil. SoFi Turd Army versus the Sharks, the Bears, and the FUD. The light against the darkness, folks. Now, I'm sure it's not that dramatic, folks. We're just buying stocks. It's not the end of the world. Guys, my name's Danny Deals. I'm too tired to go on. It's un poco mas. I hope you guys have a great night. I'll talk at you again tomorrow. It's a SoFi stock. Ticker symbol is SOFI.